Hello, what's up, guys? So I just finished a session with my mentor, and yeah, I will just quickly run you guys through about, on uh, what we discussed over the call. So basically, yeah, I was trying to we were going through back testing, and so basically, so now we will see our strategy, the thought process on how we go about taking trades. So yeah, so how we start is like this. Yeah, guys. Okay, so first, this is the Bitcoin chart. I have done the bar replay to around like, okay, so I started around when I started the call with him, we were at, yeah, we were at here. Yeah, so we were at around, oh, wait a minute, what did I just do? Okay, never mind. Never mind. Okay, so first, what we do is this, right? Let me just put this. Okay, what we do is first we mark out the pivots, fair value gaps, and order blocks. So we start off with the weekly time frame. This is an obvious pivot. This is an obvious pivot. Pivot is something where the wick stands out. This is an obvious pivot. This is an obvious pivot because the wick is like standing out. You can see it here as well. So these are all pivots. We mark out the pivots with black line. Then also like we mark out, you see these dashed lines, these dotted dashed lines. Basically, this signifies that this was a high here, right? First, and then this wick went above this high. So it basically means that this wick, this wick which went above this wick is basically taking out all the sell stops from here, taking out the liquidity from here. That was the purpose of this wick going above. And then after that, it immediately dumped. You will see this quite often, like a wick clearing another wick and taking out the liquidity above it and then just dumping. Or you can see the opposite also, like a wick clearing the liquidity below it and then going further up, right? So yeah, we mark then we also mark out the market structure break. Like here, for example, this wick took out the liquidity and it immediately dumped. And here we can see the market structure break. We'll mark it out here. And once we do that on the weekly time frame, then we go on to the lower time frames to find our entries, right? Okay. So the other things that we mark out on the weekly time frame is the fair value gap. So as you can see, I'm using an indicator from Ash to mark out the fair value gap. This orange here, this orange here are the fair value gaps. So to mark it out, like to extend it, um, use the rectangle tool, and I draw a box. This is the daily. This is on the daily. This it's already marked on the daily, so you can see it there. Okay, this is the weekly fair value gap. So basically, the purpose of using a box like a translucent box is to show point of interest, so that when we go on our lower time frames and the price reaches here, then yeah, it should we should click in our head like, okay, no, we need to be alert, and price is going to react from there. So okay, we do that on the weekly time frame, then we do the same thing on the daily time frame, right? We do what on the daily time frame, right? This is from the weekly time frame. Do we see other pivots? No, we don't see. Okay, we see this pivot on the daily time frame. We marked it out. We see this pivot on the daily. Actually, yeah, now I remember we we were here. Yeah, on the 5th of Jan. Yeah. So yeah, we see this is a pivot, obvious pivot, kind of like a resistance support actually. We mark it out here. We mark we say D means daily, W means weekly, and yeah, we mark out the pivots. Then we mark out the fair value gaps. Uh, so there's a fair value gap here. I did not mark it out because I have already marked a fair value gap here, and if price breaches this fair value gap and goes above, then okay, then I will go and mark it out. Otherwise, I don't want to mark it out. It just makes the chart like look very ugly. So there's a fair value. So I marked out the fair value gap here on the daily. So I should like by right name it as daily. Yeah, actually I had already named it daily. Yeah, it's written on the right. See. Yeah, so that is our daily fair value gap. Yeah, yeah, we did the charting on the daily. So on the daily as well, we can see that there's a sweep of liquidity. This was a high. Then this wick went slightly above it and took out all the sell stops, and then after that it immediately dumped. There's a market structure break here, and it immediately dumped, right? So, and what's the purpose of marking this fair value gap here? This is my point of interest now. So when I am expecting price to like come up and then dump again. So that's why I marked the box. Okay. So we have done on the daily, and we move on to the 4-hour chart. Yeah. And after that, we are marking out the premium and discount regions. Okay. So basically, yeah, we from the high to the low, we mark out the FIB tool. We're using our FIB tool. We mark out this is the 0 level, zero point 0.5 level, and 1 level, and basically this signifies the premium and discount. So if we are looking to short, I will short in the premium. If I'm looking to long, I'll long in the discount. So if I'm looking to short, so this is my point of interest, right? On the daily chart, we had marked this fair value gap, right? Um, then, so on the daily chart, okay. So on the daily chart, well, let's say if I can see that there's a shorting opportunity here, right? Right, when the price comes here, that's where I will, and there's an obvious invalidation here on the high, and then price will go, I'm expecting price to go all the way to this pivot below. Then I move on to the 4-hour chart. So that's the usefulness of going to the lower time frames. Now we can refine our entries further, right? So I'm on my daily chart, I marked the shorting opportunity here, right? On the, actually, let's say this premium and discount tool is not there, right? Because I'm on the daily chart and I still haven't marked out the premium and discount tool, then I will like my shorting opportunity will be at the right at the starting of the fair value gap. Okay. Now I go to the fair 4-hour chart. I mark out the premium and discount tool. Now I can refine my entry a bit more. I can go to, because I want to shorten the premium, so I will go to right there. But then I see that okay, the fair value gap on the 4-hour chart is here. There's a small fair value gap here, as you can see. Then there's another fair value gap here. So I can refine my entry further. I'll go to this fair value gap. See, I will go to this fair value gap for my entry. So that improves my risk to reward, right? So that is how you refine your entries while by going to the lower time frames. So that's the main idea, like why you go to the 15-minute time frame or to the 5-minute or to the 1-minute time frame, basically to refine your entries. Okay. Now, unfortunately, what happens is that price does not go come get, we do not fill our entries here. Price just dumps, right? Okay. So, but that's the idea behind these kind of setups. So yeah, price. Hmm. Yeah, on the 4-hour chart, we'll do the same. We mark out the order blocks, pivots, and the fair value gaps. This is the fair value gap here, right? Okay. I don't see any order block. Okay, so let's go down further. I mean, let's play. So see, price is straight away dumped. It didn't come to my order block. So now, okay, now there's, sorry, these, okay, I'll just delete my shorting thing. Yeah, these things were already marked here because I mean, I just finished my class with the mentor, right? So we were just going through. I did not delete all this. So basically, yeah, this is the 4-hour fair value gap here that just now has come into play. This is the 4-hour fair value gap, right? Let's write it. Okay, so we just mark those point of interest. Okay, now let's continue. See, it keeps dumping, it keeps dumping. Yeah, it came into our point of interest, fair value gap, right? Let's see what it does now. Yeah, yeah. So as you can see here, also there's a sweep. This was the high, then there's a sweep here, and there's a market structure break. It immediately dumps. Mm, and then that once we see the market structure break, we should go on to the lower time frames. Let's say the 15-minute, or the 30-minute, or the 5-minute, and look for fair value gaps to make our entry. Yeah. So yeah, that's how. Uh, that's kind of like the general idea behind this setup. Uh, I think I didn't do a good job in explaining, but I'll definitely, uh, because I'm still trying to understand it, and once I get understand it fully, I'll definitely let you guys know like how to do it. Uh, but yeah, so yeah, I will backtest it and I'll get back to you guys soon. All right, have a good day. Bye bye.